Welcome to Influential Entrepreneurs, bringing you interviews with elite business leaders and experts, sharing tips and strategies for elevating your business to the next level. Here's your host, Mike Saunders.
Hello and welcome to this episode of Influential Entrepreneurs. This is Mike Saunders, the Authority Positioning Coach. Today we have with us Mark Myers, who's the founder of Peak Profit Solutions. Mark, welcome to the program.
Thank you so much, Mike. Glad to be here.
Yes, I'm looking forward to talking to you because I always love hearing the word solution. I want to hear a solution to a problem, and the problem might relate to profit. So good. We want to talk all about that. But let's get us started with your story. What's your background and what's your entrepreneurial journey been to this point in your career?
Great question, Mike. Thank you so much. It's interesting. A lot of people ask me, how did you get into advanced tax planning? Being that you went to the University of Florida, got your exercise physiology degree and your master's in sports management.
Sure, that makes sense. Yeah,
So it's always a story. It's funny. I moved to New York City 20 plus years ago, and I started running really high-end health clubs. I did that in New York successfully, in Los Angeles for close to 12 years. And, in that process, I just became a really good operator, business operator. I understood how to drive revenue, manage expenses, and drive EBITDA margins. And I was bonused off of that as well. So once I realized that I would never really be as financially efficient, or I wouldn't earn the dollars that I really wanted to earn in that market, I said, you know what, I need to reinvent myself. I understand how to run businesses. I understand how to talk to business owners. Let me be a consultant to business owners. So that was my transition away from managing other people's businesses into helping business owners initially, really become more profitable and run their businesses from a financial perspective in a better way.
That's an excellent point. And so I want to roll right into that, go a little bit deeper, which is, I'm sure you watched this little startup show called Shark Tank, right? But you can't turn on an episode without hearing them go, know your numbers, know your numbers. When you are working with businesses, isn't it probably true that many of them don't know the numbers as they should?
100%. Knowing the numbers is key. And I'll tell you something else, Mike, this is huge. And this is what I've transitioned to in the last decade is maybe they do know their numbers well, but they never look at their tax problem or their tax bill. They don't look at that as a profit center. And it changes your whole perspective. Now you're looking at your tax bill as a profit center, and that most business owners, they think that the taxes are just, they are what they are. Like, they drive their revenue, manage their expenses, and they have to pay their tax. Well, if they realize that, if they took more time to plan out their opportunities for reducing tax prior to having the tax bill, they might pay 50% less. And that's a lot more profit.
That's a big, yeah, that's not like, I can save you a couple $100. No, 50% is a big old number. And it makes me wonder, when you say, like reducing by 50, good, let's talk about that. But is this for only business owners? Because we always know that they have so many opportunities for deductions, but what if it's just an individual that works for a company? Do you have those same kinds of opportunities as well for both the individual and an entrepreneurial business owner?
Absolutely. And it's interesting because, most W-2 earners, particularly the ones that are making a lot of money, and it could be that they have $150,000 salary at Google, but they are exercising their warrants every year and they have 7 figures of warrants, right? Which come to them at regular income. So, or RSUs or ISOs or NQCs, or not qualified options. But the good news is I can help both. Business owners, there's a lot more opportunity because they can control the way they receive their money. But, if you're a high income earning W-2, whether because you have salary plus bonus, or you have huge sales commissions, or you are exercising options, there is a way to significantly reduce your tax as well, which is a breath of fresh air to a lot of clients, particularly in Silicon Valley.
Yeah. Well, let's go.
They can actually do something more.
I certainly don't want to get into, deep in the weeds of strategies and specifics and things, but can you give us a broad stroke, 30,000 foot example of what maybe an idea or a tip would be for someone that is a high income W-2 owner as well as a business owner, just to kind of give us an idea of how you start chipping away at that, reducing taxes by 50%?
Sure. Well, for the W-2, we look at really there's a couple of solutions that are powerful, and those are all that are really needed. One would be, looking at making charitable contributions, but doing it in a leveraged fashion. So a lot of times when I say charitable contribution, they're like, how's that going to help me? I already give to my church or my local, Boys and Girls Club or whatever it
Yeah.
is they're philanthropic about. And last time I checked, you give away $1, even in California at the top tax brackets, you're only saving 53. Well, I say only, you're saving 53 cents. So that, spending $1 still costs you 47 cents.
Yeah.
How's that helping me? And I'm saying, well, think about it this way. What if you were able to purchase an asset for $1, but it's worth 4? And then you decide to give it away. You don't have to give it away. It's yours. You can keep it. It's worth $4, qualified appraisal. But if you want to give it away, you get a $4 deduction. So now it changes the game a little bit. If you're in a 53% tax bracket or even a 37% tax bracket in Texas or Florida or Washington, well, a $4 deduction in California at the highest tax brackets gives you almost $2 in tax savings.
And you're only put
if you can get a $2 tax savings for $1,
yeah,
that makes a lot of sense.
Yeah.
Not only does it make sense, it makes a lot of dollars.
And guess what? It is philanthropic. So whatever institution, organization that you gifted that to, they benefit. It gives you, and we could go so deep on this, but I've done a lot of work. I teach marketing for several universities online, and there's something called corporate social responsibility. That's a thing, right? And there's something within that called the halo effect. And when you make that known, not in a boastful way, but when people realize that you do have philanthropic and corporate social responsibility, it puts a halo around your brand. And so we can go really deep on that. We don't need to, but I think that puts a bow right on that to go, ooh, that's one way. And yay, we didn't get into the weeds, but I love your simplicity of, hey, what if you could put $1 into something, buy an asset worth $4 that still gives you a tax write-off of about $2? Would you like to learn more? Love, love, love that.
Absolutely. And it's very simple. It's very, like you said, philanthropic, and it's been going on for 100+ years. I mean, you've heard stories of where, this wealthy individual donated a piece of artwork to the local museum. That's so nice. The piece of art was worth $3 million or $5 million. Well, yes, they are philanthropic and they wanted other people to enjoy the painting, but they probably purchased the painting for $1 million and they got a $3.5 million deduction for it, right? Which saved them a lot more than $1 million in taxes. So.
Yeah. So what about really on the entrepreneurial side? I'm sure that would apply either way. It doesn't matter whether you're W-2 or business owner, but I'm sure maybe there's some nuances there, correct?
100%. So this strategy, Mike, is really doesn't matter where the income is coming from, whether you're a business owner and you have profits above your salary that you pay yourself, whether you're earning dividends, whether you're a high income W-2 that just pays an exorbitant amount of tax because you don't have any other options. This solution works for all of them. But the good news is most W-2 think they have no solution opportunity available. This is one. And the other is, the Inflation Reduction Act just was signed into place for the next 10 years. And the federal government really, really wants the private sector to continue to support the renewable energy grid in the United States, particularly solar. So a W-2 earner can actually acquire solar panels on commercial properties and receive significant tax credits and depreciation, meaning that they can offset their W-2 income with solar purchases, just like Tesla and Chase Bank and Amazon and Bank of America and Wells Fargo have been doing for 15 years. They can actually do the same thing. So the interesting thing about this is, would you rather send $1 to the federal government and they spend it the way they want to spend it, which may help you or it may not, depending on variables.
Depending on what you think the government does with money, that's a whole other story. All right.
That's right. Or do you want them to, or do you want to take them up on their offer? Because we can make it where every dollar that you spend on solar, which might be going on top of a private school or a Boys and Girls Club or a museum or a church or a synagogue, every dollar you spend, we can give you $1.05 or $1.10 tax savings in the very first year. So technically, who bought that asset? The government did. And guess what it gives you? 25 to 35 years of cash flow. So
Now,
essentially, if the government's willing to buy you a 25-year cash flowing asset that they pay for and you just collect the cash flow, that's a pretty good deal.
so here's me listening to this as a uneducated third party, hear that for the first time. And I'm either So I want to clarify this, because when I hear solar and rebates, I think, oh, that's the people that come around to my house knocking on the door going, I could put solar in, you can get some rebates. And my response to them is no, because I've got to lay out 30 grand, either cash or borrow it to give it to you for solar. And then maybe I get a little trickle back for, some rebates, but you're talking about a whole different strategy than that.
Absolutely. Think about this in these terms. Knock, knock, knock. Hello. How are you? Yeah. Did you know that you could reduce your solar bill significantly with solar panels? Oh, we've heard that a lot, but we don't have the capital to do it. So this knock is happening on, to an administrator of the school or to a church or a nonprofit or maybe a multi-unit
Like a
apartment
commercial property.
Right.
Got
Now the conversation is a lot different, Mike, because what we're saying is, and again, this is not, the client doesn't have to do this. We turnkey all of this. So
Yeah.
essentially the client just participates. But now the owner of that building is presented a different opportunity. You don't have to spend a penny. All you have to do is sign an agreement for the next 25 years that says you're agreeing to purchase energy from a solar company that's going to put solar panels on your roof. And you're going to pay 25% less in the first year. And by the time we get to year 15, you're going to be paying 50% less than what you pay the current utility company. How does that sound for you? Generally speaking, they love it. Guess who's buying the solar panels? The W-2 earners that I'm working with, because every dollar that they use to purchase the solar panels, they're getting more than $1 of tax savings, plus they're getting the cash flow from the power purchase agreement over the next 25 years.
Yep. So is it similar? And we tell me if we're getting too deep in the weeds, but I think this is so interesting. I love your word pictures. But is it similar to, hey, you could become a real estate investor and buy this multifamily unit, then you've got all the risk and you can need to borrow the money, or you can go to this group who they buy, you put in X number of dollars, they go do all the legwork, they make the investments, and then you participate in it and get some of the cash flow, not all of it, but you're with a group of investors, not a REIT, but like a group of investors that go out and they buy large properties, and you might have 30, 40, 50 investors buying that property. Is that a similar concept within the solar for these commercial installations?
I love the way your mind works, Mike. Obviously, very, very resourceful thinking and fairly on track there. But there's a couple of nuances. But I guess the way to look at it would be, and I like to use that analogy. It's a perfect analogy.
Good.
You can go out and as a W-2 earner, nobody tells you can't go purchase a single family home or a multi-duplex or a fourplex or a small apartment building and basically put it in an LLC and essentially benefit from it as a side business, right? Unless your company doesn't let you to do anything except work for them.
Yeah.
But
who has the knowledge and expertise and time? And I wonder if I'm doing it right, and the risk, and oh my word. Yeah.
That's exactly right. But the benefit could be, well, you get depreciation on the real estate. And of course, if you can work over 750 hours a year in real estate and show that you're doing 50%, then you could take that depreciation against your Amazon income. Well, that doesn't make sense. They don't have all that time and all that energy and bandwidth. But if you could say the same thing applies in solar, but it's all turnkey. And now the dollars that are going into purchasing that solar is basically being funded by the government because they want you to do it. It's almost like, hey, we need more duplexes out there. If you're willing to go buy a duplex, we'll give you a tax credit and a depreciation on the duplex that offsets the dollar that you spent the duplex, and you could just have the cash flow. That's basically what they're doing.
And you don't need to do it on your own by yourself. We're going to put you in with a big group of people so that you're putting in a smaller amount, and yet you're getting a smaller benefit, but it still is a benefit.
That's exactly right.
Okay.
That's exactly right.
I think that when people start hearing about reduce taxes by X percent, they think the old you should start a business because you get a lot of write-offs. But this isn't for me because I work for a company. Well, you've just given several opportunities to rethink how that could work. And again, that's where you need to sit down with someone and go, well, let's take a closer look. Let's see, tell me about your situation. Let's see, would this even be right for you? But I just think that, being able to see those things in the way that you're laying out is really, really huge. Now, what it kind of brings up then another question, which is, when you start thinking about these types of transactions, and let's say you want to move in and out of one, well, if a transaction happens where maybe you get out of a project, and that triggers taxable gains, how do you deal with that, and how do you mitigate that?
Well, great question. So essentially on the solar, the way that it works is you're purchasing the asset and getting significant tax incentive in year 1, 2, 3, 4, 5, and 6. So much so in year one that generally you're getting more tax benefit than your actually cost. So you really got your return of capital in the first year. With solar, because the acquisition literally was with 100% with tax dollars, most people don't want to get out, but if they do, just remember the tax benefits vest over 6 years. So if you do sell or even donate that solar asset in the first 6 years, then you have a recapture of depreciation. So most of the clients that do this really just say, this is just an extra income for me. Every year that I spend 100,000 or $500,000 or $1 million or however much it is they're sending to the IRS, I'd rather just bifurcate that and instead acquire solar and get it all back plus some. But the good news is every dollar that I am spending on the solar is a dollar I don't have to send into the federal or state tax coffers.
Yeah. I love the sound of that, because it brings up the proverbial example. And I know you've probably used it 1,000 times, but picture in your mind a bucket, and there's holes in it, and there's water flowing in it representing money, and then there's water flowing out representing expenses, taxes, and we need to plug up as much of the holes as possible. Never all of them. We know we can't get out of paying taxes, but can we mitigate them as much as humanly possible, legally, ethically, and all that? And I think that's what you're talking about, so that when you, as a high-income W-2 earner or business owner, you can keep more of the money that you're already making. This doesn't mean you're going to need to go out and work 40 hours more per week. It just means keep doing what you're doing. We're going to show you how to keep more of your money with some of these strategies. So I think that bucket analogy, you're showing how to slowly and methodically plug up some of those buckets as much as possible. Those are holes in the bucket.
100%. I look at it as there's 75,000 pages of tax code.
Yeah.
There's lots and lots of coupons in there. You just need to know where to clip them. And basically, I'm coming in and saying, hey, there's a coupon here, there's a coupon there. Obviously, there's many more coupons for business owners than there are for W-2 earners, but there's enough to go around. You just need to know where to find them.
Yeah.
And, the best CPAs generally they don't have the time and the bandwidth to essentially, scour the tax code and integrate these into their business. And at the other side of the equation is they're not usually looking at what's possible. They're looking at what, is what they normally do, right? It's not what's possible. That's what attorneys do, and what, people that are really spending a lot of time in creating solutions. So again, the reason why I'm saying this is because they might be working with a phenomenal tax professional, but that doesn't mean that tax professional has the time to find all these coupons, which is where I come in. And I never replace a tax professional. I just add additional layers of efficiency because I don't do any tax planning or filing or
kind of reminds me,
bookkeeping.
Have you ever heard of this example, Mark? Like in sales, don't be an order taker. Be ask questions and present strategies. So in other words, if someone comes to you and says, I want to buy your widget, you say, how many? They say 5. You say, here's the order number. Thank you. Have a nice day. That's an order taker. But what if they said, I need 5 of your widgets, and you said, oh, well, what are you going to use it for? And, oh, that's interesting. And then you, through a series of questions, go, hey, you know what? Have you ever thought about using it this way and this way? And all of a sudden that 5 widget order turns into 25 because you thought outside the box. What you're saying is some CPAs, tax preparers, only fill in the blanks and quote unquote do taxes. But what you're saying is you can show some of these strategies that, maybe they're not watching for because they're just, cranking out tax returns. Nope, they're not doing it deceptively. They're not trying to, shortchange you. They just aren't tuned into these kind of strategies.
100%, Mike. And I would say some of my best partners in this business are tax professionals because they love the fact that they can bolt me on to their practice and add additional value to their best client, not their best clients, but their highest income earning clients, which usually opens the door for more high income earning clients for them as well.
Because
really
they look like a rock star by bringing your strategies into what they're delivering.
Absolutely. And the retention is through the roof, because nobody could ever say, well, my CPA just told me I just have to pay the tax because that's part of the process of being very financially successful. And they're scratching their head thinking, well, why don't all these large corporations pay tax? And why don't these ultra wealthy people pay tax? They have the same tax code we have. So we essentially are saying you're absolutely right. You just have to find the right
that
resources.
Client is at church, gym, club, Rotary going, oh my word, tax time again. And then the other client's going, yeah, what? I just rocked it out and got this and this and this. And they're like, how'd you do that? We'll talk to my guy or my gal. And so that just becomes a way that word of mouth then amplifies because a job well done. So I think that is just spectacular. Mark, you've got some really great insights on delivering this kind of value. If someone is interested in learning more, what's the best way they can reach out and connect with you?
I just have them come to my website, peakprofitsolutions.com. And on that site, I actually have like case studies. So if they want to, plug in to get a case study and take a look at that before they talk to me, great. But if they just want to do a 15, 20-minute consultation, literally it's no cost. And it takes me 15 to 20 minutes to determine an approximate opportunity amount with regard to savings. I can literally pinpoint the approximate opportunity for savings within a 15 to 20-minute phone call.
Excellent. Well, Mark, thank you so much for coming on. It's been a real pleasure talking with you.
You as well, Mike. Thank you so very much.
You've been listening to Influential Entrepreneurs with Mike Saunders. To learn more about the resources mentioned on today's show or listen to past episodes, visit www.influentialentrepreneurssradio.com.